Stock of the day, it is GUD Holdings. This after, well, in fact, the broker Citi upbeat following its trading update yesterday. The automotive aftermarket parts maker forecasting FY24 underlying EBITDA to be at least $193.5 million, which is in line with expectations. The Citi is flagging a destocking exercise by Bapcor, which is one of GUD's key customers, as a potential risk. And we have seen it's, in fact, last time I take a look, we don't actually have the chart with us, but last time I took a look, it was up about 10% in today's trade. Yeah, just below 10% higher on the day thus far. David, yeah, further to what Citi was saying, it's saying also that investor fears are somewhat overblown about the magnitude of the downside risk with from its Auto Pacific Group business in its underperformance. So overall, what are you looking at GUD?
Yeah, look, their half-year result was pretty good. The numbers that showed up here, they had 8.6% growth in revenue, net profit, statutory 19% growth. So that's pretty good numbers. Obviously, there's a lot of people with four-wheel drives and seeking auto parts and new car sales as well. But look, it's been in the trading range, as you can see in that chart, between basically $10 and $12. So it's really not been a very inspiring chart since August last year. It's just been going sideways. Great trading stock between those two levels. So down here it's had a good bounce this morning. I think it's up 9% on those half-yearly results. So look, it could easily track back higher to the previous top of the range around $12 up here. It's not an aggressive buy in my book because the trend has weakened, as you can see, from those peaks around April, early April. The stock did pull back from that $12 level and went actually just below 10. So now it's bounced back up above that, but it's a hold at best for me. But look, the numbers were good, and obviously that's being reflected today with the stock up 9%, and they're pretty positive outlook as well on auto parts and lighting for vehicles as well.
Yeah, so the market clearly liking what it's heard from the company, and at least some of the brokers agreeing. Michael, do you agree?
I agree that it's a hold here. It looks like it will edge higher. It's not a screaming buy. So I think it's what we're seeing today is just a bit more of a relief rally because the shares had been sliding up until we received this trading update where they pretty much confirmed their previous guidance. I think the market was concerned that there was a risk of a downgrade occurring because there's been a couple of issues with GUD with their markets in New Zealand. There was some government changes that affected some of their sales there, and also Toyota. So they supply a lot of parts for Toyotas, and it looks like Toyota were reducing the number of cars coming into the country because of some software issues that it's quite detailed. But ultimately, there were a couple of sort of headwinds there for the stock, and it's they'll fair value. I guess a couple of months ago, you've got a stock that grows at about I think earnings growth is around sort of 8% a year, and it trades on a PE of 12. So sort of coming into the trading update last night, it was maybe a little bit oversold, a little bit cheap, bit of a relief that we have this reaffirmation of guidance. So you might see it edge up a bit more from here, but I think after today's move, that's probably the bulk of it really.
All right, so that is a double hold then for our stock of the day, GUD Holdings.